Today, we are talking about claiming medical expenses on your taxes. So, there
Oh,
are quite a few different medical expenses you can claim, both for yourself or a spouse or a dependent. So, I am going to link a full list if you're somebody who wants to go through and see what you're eligible for. I'll link that in the description. But we also just wanted to go over the process a little bit and explain it a little bit.
right. Okay. So the government allows you to claim certain medical expenses on your tax return. And so you get a tax credit equal to 15% of the expense. Now, the way the expense is calculated is a little bit complex. So we'll start with that. So you have to have medical expenses that are equal to or greater than either 3% of your net income, or the limit in 2020 was 2397. So if your medical expenses are less than this amount, then there's no point. Like you're not going to get anything for them. But if your medical expenses are greater than the lesser of 2,397 or 3% of your net income, you get to claim the difference between your medical expenses and that amount. And that's what you get the 15% of. As you said earlier, Riley, you will be linking a list of what you can claim. Very common medical expenses we see are, dental, glasses, prescriptions, physio, those kinds of things. So if you aren't sure, refer to that list and then you'll definitely know. The main thing is, it has to be prescribed by a doctor. Your doctor has to say you need this prescription. Um, I know naturopaths are doctors. Naturopath visits are actually a medical expense, but the prescriptions, so they tell you to go to a health store and buy some supplements. The supplements are not, the naturopath visit themselves is. So if you're unsure, go to that list and take a look. So I know for some credits we've talked about how you can claim credits from another year and this year. Medical expenses are not like that simply because they are based on your net income. And so your net income could be really high in one year and really low in another. And so your medical expense claim amount actually changes from year to year. And so that's why you can't claim something on another year that you missed in a prior year. If you do have like an expectation of a 12-month period where you will have a whole bunch of medical expenses, you can actually claim, you can file an election to claim medical expenses off calendar year. But it's not really recommended unless you know for a fact like you're just going to be out for the count for the next 12 months and won't have any income. So who can you claim for? So you can claim for yourself, you can claim for your spouse or your common law partner, and you can claim for your or your spouse's or common law partner's children who are under the age of 18 at the end of the year. Now, you can also claim medical expenses for children if they're over 18, if they have a disability, and then basically any dependents. So if you've got, your parents, grandparents, brothers, sisters living with you, then you can claim for them as well. So you should be filing all your returns together if that is the case. The original medical expense credit that we just talked about, it's non-refundable, meaning if you don't have any tax to pay, you don't get anything for it. But the refundable medical supplement, you get regardless of whether there's any tax left to pay. And so this is basically for low income individuals, and it has to be employment income. And then there's a calculation that's made on your tax return. And so you'll get a portion of that back, regardless of whether you have any tax to pay or not. Something else that I just want to bring to light here is if you pay for private healthcare insurance, that's a medical expense. Any amount that you pay out of pocket, so if you go and get a prescription and 80% is covered, you can claim the 20% that you had to pay out of pocket. So that's something to look out for as well. I know the insurance will usually send a statement saying, this is what you paid, this is what we paid. And so that's something that the accountants would need as well at the end of the year. If you run into the situation where you're sitting with a stack of prescription receipts, you can always go to the pharmacy or even your dental, wherever you've got the stack of receipts from, and ask them for an annual statement, and they'll be able to give that to you. And then that's something we can use on your taxes, and then you don't have to sit there and submit 100 little pieces of paper. And so that's something to keep in mind for sure.
Really, what you need to know is if your medical expenses are more than 3% of your net income or over $2,397, whatever the lesser of that is. If you're over that, then you can claim some, and you can refer to the list that we have to see what you are able to claim and what you're not able to claim. And keep in mind, you can claim for yourself, your spouse, or common law partner, and any children or dependents.